It turns out Janus is a hidden gem. It's an industrial asset that has grown at 10% organically 20 years in a row.
Hey everybody, this is Howard Lindzon. I am excited to have another member. Everybody doesn't know that I'm friends with his kids, but the senior Fradin in the household, not in the house anymore, Roger Fradin. Welcome to my video version of Panic with Friends.
Thanks, Howard. Great to be here.
So where are you today?
I'm in the Bay Area, California, part of Silicon Valley.
So I want to get right into the topic, which is SPACs. It's captured the imagination of a very young, obviously it's captured the imagination of hedge funds. It's an old feature. I believe it's an elegant feature whose time we've in this weird moment of time, or we could argue all day long about, is this a fad? Is this not? When did you first hear the term? And what did you like about the idea of a SPAC, just in general?
So I probably first heard the term, Howard, I want to say three and a half years ago. And my initial reaction was, I didn't like it, didn't really understand it. And for somebody who's been a, kind of tried and true industrial executive entrepreneur for many years, and not familiar with financial products. The terms were strange. I didn't understand the workings of it. And I initially shied away from it.
Mm-hmm. And so how many yes, because you're set in your ways like anybody above the age of 50, but you have a technology savvy family, like we'll get into it, but so what was it that finally caught your, what is it that finally said, okay?
So my younger son, it grew up in the financial world, typical financial background,
Mm-hmm.
had actually been doing SPACs for a number of years.
Yeah.
And he held my hand, took me through the mechanism, demonstrated how at the time I would actually have a unique picture on the SPAC world, given that I'm an operating type, not a financial type.
Mm-hmm.
Long story short, back in June of 2020, ended up deciding to raise a SPAC and go forward.
And were you retired at the time, or were you still an executive?
Yes, I was retired from Honeywell, on a number of boards. I was an operating executive with the Carlyle Group, a major private equity firm. Had done a number of private venture investing, angel investing, actually with a number of companies that you would be familiar with. Mm-hmm. And it was, although it sounds like I was busy, it was nothing compared to being CEO of a $20 billion global business. So I was having fun, kind of kicking back, advising and helping others.
And so a career today, I mean, I'm going to hop over the place because we'll come back to the SPAC, but a career today, Russ, your son, is an entrepreneur. Bill's in the family office wealth management side of the business. You came out of the world at a different time. We're climbing the ranks. What made you stick at the corporate job, and how is it different today for someone who wants to go to the corporate world?
So I'm going to give you maybe a different answer than you might be expecting. I started my life as an entrepreneur. I was not a corporate type. Okay. Built the business from essentially startup to just under $2 billion in sales over a 25-year period. We were the #1 player in the world in electronic, life safety, and security products. So think about all the components that go into a home alarm. That was
and your customers were like ADT or Honeywell, or
ADT, Honeywell at the time were our large customers. And if you go into a commercial building today, you will see fire alarm systems. You can't build a building anywhere in the world without having a commercial fire alarm system. we were #1 technology providers there. I also started a company called First Alert.
Oh, wow.
Helped
Okay.
invent the home smoke to do-it-yourself market.
Uh-huh.
And we were a closely held public company, really ran it like a private company, although we were public.
Mhm.
Honeywell came along. We weren't trying to sell the business. Honeywell wanted our business. And in 2000, we sold the business to Honeywell. And as you well know, people like me are normally the first people to go
Uh-huh.
in an acquisition.
Uh-huh.
Honeywell had just merged with a giant company called Allied Signal in 2000.
These are
The two giant aerospace companies came
before the
together.
March crash or after the March crash?
Before.
Before. Okay.
And the idea was, we're going to take out all this cost from putting these two aerospace companies together. And we bought Rogers' company for growth, because I was growing 15% a year, which was kind of unheard of in the industrial space. Long story short, it was a failed merger. Honeywell stock went from 60 to 20 over a 6-month period of time. An important lesson I learned is, I'm glad we sold the business for cash. And then GE, General Electric, came along and tried to buy Honeywell.
Yeah.
It was if you remember the Jack Welch era then, it was a big deal for him. And I'm trying to hold my little company together while these corporate titans are fighting everything out.
Right.
Honeywell was a shambles. We missed every quarter. Wall Street had lost interest in us, had lost confidence in us.
What did your hair look like?
Yeah, I had a little more hair.
Okay.
GE walked away from the deal, and Honeywell was a shambles. In came this fellow, Dave Cote. He and I hit it off very well. He, by the way, I think Dave Cote is
With a C or K?
COTE. He's probably the finest, one of the finest CEOs in the modern era.
Yeah.
Our stock was at 20.
Uh-huh.
We worked like heck to rebuild capability. Dave asked me to take over essentially what was $5 billion of Honeywell sales at that time.
Mhm.
I grew it to 20. I was the #2 guy there for 17 years. Our stock went from 20 to 210 today. And we went from being among the worst industrial companies on the planet to being one of the better ones. Along the way, I built an M&A machine. We bought about 60 different businesses. So you asked me why I stayed. I had no hobbies at the time. And my two older sons, who you know,
This explains Russ's personality. This is starting to explain Russ's personality.
It is. They were both out of the house at the time.
Yeah.
And my wife was able to travel with me. I became a globetrotter as part of Honeywell.
Mhm.
I was in a group called Young Presidents Organization. Everyone I knew said, "You're never going to make it. They're going to get rid of you." And I said, "No, I'm going to give this a try." So in a million years, I was not attracted to the corporate world. I always thought people running these big corporate businesses must be better and smarter than me, because I'm running this little company and they're running a big company. They must be better.
Mhm.
Well, not true. The other aspect of it, Howard, to be totally open, in the industrial world, even today, there are very few people of Jewish heritage that rise to the top.
Huh.
Doesn't happen.
Well, because I don't even know how to use a
think,
hammer. I don't even know what a hammer
you
looks like.
will have to think long and hard
Sure.
about, and that's just true.
Mhm.
So I took a lot of pride in, I really was part of this incredible turnaround story.
Right.
So-
And when you left, what was your position?
Vice chairman. I was, and I am regarded as Dave Cote's right-hand man. That's the other thing that happened. When Dave Cote retired, he also decided to do a SPAC, and he invited me to partner with him. So the very first SPAC I actually got involved with was partnering with Dave. We raised $700 million. It was the second largest SPAC ever raised in those years. I think the largest was
$1 billion
$1
back then. Yeah. That's a lot of money.
A lot of money. We ended up de-SPACing with a company called Vertiv, owned by Platinum Equity. It was a $4.5 billion transaction. We de-SPAC'd in February of this year. The stock's now trading at $20 a share, and it's a legitimate, it has real earnings, it's a real business, 450 million in EBITDA. We provide all the stuff that goes in a data center.
Right.
The environmental controls equipment, the power supplies. And we didn't know this. It was a total, like, where did this come from? In the world of COVID, everybody's staying home and the demand for data has just exploded. And we got lucky. We bought a good business and got lucky. And Dave Cody's also on the board of my current SPAC. So we still work closely together.
So it's like a renewed, I feel like, I mean, you haven't had time to probably enjoy the markets. You've been so busy running, you know, Honeywell, and then obviously you've moved right. Did you take any time off between deals or to just be?
I did, but and if I listed out the stuff I work on, you say that sounds like a full-time job. I'm telling you, Howard, being CEO of a $20 billion global business where you're working 24/7, that is a full-time job. Everything I've done since is like, really, it's just not that much time.
So you're saying you didn't have time to tweet. If Twitter had been around, would you have tweeted in 2000?
I'm not a social media guy. So I'm not on Twitter, not on Facebook.
And do you think, in seeing like some of these new leaders use it, like Elon Musk, what do you think? Like, do you follow like how people are using it, and is it a tool that?
I don't get it, and I don't mean that negatively.
Yeah.
I didn't grow up in that world. I'm not sophisticated in that world. I rely on others. So
there you go. And so the SPAC comes along. So the name of the firm is Janus. So tell us how you come up with the name and the focus and the whole process of you know, you raised the capital. You did. I assume you did a Zoom roadshow.
No. This was pre-COVID.
It was pre-COVID. Okay, so pre-COVID, what did the roadshow look like?
Running around New York City to meet with about 40 different, hedge fund types, a day trip to Toronto and a day trip to Boston, a couple of phone calls with funds in Chicago and Denver, and in a week we were done.
In a week you were done. Would you do another one?
I am in the middle of doing another one. Yes.
And have you done it?
And you say why? When we started out, it was a different world. There was no Virgin Galactic. There was no Nikola. Nobody was, that whole part of the SPAC world had not come into being. What am I good at? I'm good at grunging industrial companies, aerospace companies, defense companies. And of the 300 some odd SPACs out there today and growing rapidly every day, as you well know.
Yeah.
If there are 10 of them that are focused on the segment of the market I am, it's a lot.
Got it.
It's fintech, it's healthcare, financial. It's not operating people like a Dave Cody or myself.
No, it's a unique skill. It's a unique skill set.
Well, and it's not for everybody. A lot of counterparties, as you well know, are simply looking for
growth,
cash and trust at the cheapest, price they can get it, and not looking for value add that I could bring or Dave could bring to the party. And that I'm kind of jumping ahead as to why a company like Clearlake, the sponsor that owned Janus, did a deal with us, is they actually believe that I can make their company more valuable with the set of operating practices that I bring, number one. I give them credibility in the public market because I am well known by the investors. Same investors that followed me at Honeywell say, oh, Roger's doing Janus. We never heard of the Janus team, but we know Roger, he's on the board, he's going to help make the company better. And they valued my credibility, where a lot of the SPACs today, it's simply, you're a financial type, you got cash and trust, bid against 6 other ones as to how much you'll you'll give up or you promote to get the deal done.
Yeah.
So it's a different,
So
I had the opportunity, I think, share with you, Howard, to watch your interview with Chamath, who I have enormous respect for. He's playing the SPAC market in a very different way than I'm playing it.
yeah.
He's obviously been enormously successful, but I think there's plenty of room for SPACs like mine as well.
No, and what's so interesting, it's a supply demand game. And I take a very macro view of very few things because I don't get paid for that. But if I were to look at this from a macro world, it's a supply demand thing. We had, as you know, from all the mergers and the roll-ups and the lack of choice, the world became, hey, here's 500 companies, take it or leave it, lower your fees. And, what was upsetting to me as a student of the markets, and by student, I mean, I love them. There's no textbook. They say there's textbooks, but there's no textbook. Why do I have to own Wells Fargo? And in a world where Betty and Joanne and Howie and Jim wake up every morning in their 401k and allocate their money to the S&P 500, what's the penalty to a Honeywell or a Wells Fargo if they're not executing well, if their stock gets bought by Vanguard and BlackRock the next day? I don't think people still realize how broken that is, as efficient an idea that is from a financial perspective, right? We were let off a cliff. I think we might have been saved by this, by what everybody's making fun of right now, because we're on the other side of the barn right now, where the inmates are running the asylum, and they can make stocks that are bankrupt go up. But this is just a reaction to the fact that you were caging them inside Verizon, AT&T, Nokia, Exxon, Wells Fargo, because you told them lower your fees, own 500 stocks, we'll take care of the rest. And we were running like it was working. But people started asking questions finally, and then Robinhood and all these things come along, and they're like, wait a minute, why can't I own 460? Totally. So we're at this massive, we'll see how it continues, but we're at this massive inflection point. It's like, wait a minute, no, I don't want to own, and look what happened with Wells Fargo and some of these companies. They just behaved poorly because they didn't have to really care, because if your stock gets bought on every dip, whether you're reporting or not, it can create some bad behavior. So now there's more risk.
So you're going to ask me about Janus, what I liked about the company we partnered with. And this would be my advice to anybody thinking of doing a SPAC, is have a really good idea of potential target companies you want to go after before you even launch.
Right.
Who are the potential targets? Are they owned by somebody that's likely to transact? In my particular case, I was very much focused on private equity owned assets, because they will be sold at some point in time.
Right, because you can't talk to them, so you just have to have a gut feeling.
Well, you can talk to them. You can't have a letter. You can't have a negotiated deal with them.
Got it.
So you can start. Some of these companies I met when I was in the deal. When I was in the deal game at Carlyle, when I was in the deal game at Honeywell, I probably had built a portfolio of 400 or 500 companies over the course of many years that I potentially would be attractive. And before we started the SPAC, I had 20 or 30 that I said, these are ones I really know well. They tended to be owned by sponsors. And if you'd like, I'd give you a comment as to why I would stay away from carve-outs, corporate carve-outs, or family-owned businesses. But these were generally sponsor-owned assets, because they were going to be sold. Would I be an attractive counterparty? And Janus was actually on our very short list. And one of the first meetings we had back in December of, I got to think what year, December of 2019, was with Clearlake. And Clearlake was not thinking of SPACs. We were introducing ourselves, getting to know them. And when they decided to do something several months later, we were high on the list of people they called, because we were out there, had built a relationship. And so what Janus does as an outsider looking in, you would say they make doors that are used in the self-storage industry and warehouse. They just make steel doors. Isn't that boring? Who'd want to own a company like that?
Mm-hmm.
And it was putting off a lot of people as to what's so attractive about this business. That's not what they do at all.
Mm-hmm.
It turns out Janus is a hidden gem. It's an industrial asset that has grown at 10% organically 20 years in a row.
Mm-hmm.
Not many industrial companies have done that. With M&A, they've grown at 20% a year.
Mm-hmm.
They are the partner of choice of every large self-storage operator. So Public Storage, U-Haul, Extra Space, CubeSmart, go down the list. They have between 80 and 100% market share of the cost of building out a new facility. So if you're Public Storage,
Just for public storage, or could that be
no,
warehouse
no,
like Amazon?
this is, they have 10 or 15,000 customers. I'm just naming the big ones.
Mm-hmm.
And what they do is they are involved in the project at the planning stages. So they're not out there selling doors and hallways and other, they're planning the project. They take on the execution risk, and for a lump sum, they will deliver a fully built out online self-storage facility.
Mm-hmm.
I knew nothing about the self-storage market. The more you dig into it, you'd say, it's a great market. Americans are accumulating more and more stuff. Americans are moving, they die, they get divorced, they get married, they have kids. All these events trigger the demand for self-storage.
Mm-hmm.
And you have major financial players like Public Storage, like U-Haul, like
Sure.
Extra Space, that are operating these businesses, and Janus is their partner. So Janus is who they go to either build out facilities, remodel facilities. And yes, Janus makes a lot of stuff, but fundamentally, they de-risk the entire project for the self-storage operator. So for example, e-commerce is putting Toys R Us, Walmart stores, these big box stores are empty.
Mm-hmm.
And so instead of building a new facility, a lot of self-storage operators buy an existing shell, an old Walmart. They contract with Janus to come in, take the one-story facility, make it 2 stories, and build an entire self-storage infrastructure.
Mm-hmm.
And that's what Janus does. So that the industry's growing like crazy.
And did private equity
Janus,
own them? The
Clear
private
Lake owned them. Clear Lake is a large and successful Los Angeles-based private equity fund, founded by a guy named Jose Feliciano. If you Google him, you'd say
singer Jose Feliciano.
No, same name, but incredibly successful young man. I can say young man because he's at least 20 years younger than me. And one of the better funds out there. There are private equity funds that run a business. I'll say Carlyle as an example. When we buy something, we invest in it for the long term. And then there are private equity funds that really just strip the cost out of a business and then dump it. That's not Clear Lake. So that was attractive. We like their growth rate. It's a hardcore industrial asset, which I know well. I know the end market well, not self-storage particularly, but I know similar end markets well. I know how to run project businesses, service businesses, manufacturing businesses. So one, a great sales growth rate. Number two, big dynamics behind the industry. 60% of the infrastructure is older than 20 years, and it needs to be modernized to compete with the new stuff coming online. Number one. Number two, the market is sold out today. It's at 95% capacity. COVID is one of the drivers, just because everybody's moving and needs someplace to store their stuff.
Yeah, in a way that was a boom, because I have a couple questions, but keep going.
And to get back to the 85% capacity sweet spot of the industry, they need to bring 100 million new square feet of self-storage capacity online. Janus makes 10, 15 bucks a square foot. That's what they do. Second point is, These guys make 25% EBITDA margins. So they're highly profitable. And I know I can help make those margins better with the toolkit I bring from Honeywell, from sourcing to operating practices to pricing. Not that they're not good operators, but I really do have a toolkit that's going to make the business better.
So did you stay on the board of the merged company?
I'm going to be on the board, yes.
Yeah. And so my question is, this can only be macro. In a world where kids today have less to listen, I've seen the Bravo shows, we've seen the, the storage shows, Storage Wars, and
I haven't though. I've heard about them. I have not seen them.
I have a wife who loves that channel. So assume that it exists,
Yeah.
and so the macro person to me, because I can't drill down into the business, I'll assume the numbers are correct. In a world where the digital is, when the millennials don't care much about stuff, is that a macro trend that you have to think about, or did?
It's just Howard is just the opposite. I'll give you the story. So I didn't get to the best part of.
This is why you're good.
Did you see? It was a couple of days ago. Company Latch went public.
Yeah, and what I think didn't Chamath do the deal or the pipe?
Yes, he's one of the investors in the deal.
Okay.
If you understand what Latch does, and you look inside of Janus.
Have you talked to Chamath? Have you talked to Chamath?
No, Russ has. So
Okay.
Russ knows that operation pretty well.
Okay.
Inside of Janus is a company called Noke, N-O-K-E, that Janus bought 2 years ago. It is the Latch business model for self-storage.
Got it.
So it is there's an opportunity within the self-storage market to change out 22 million padlocks that are on these self-storage doors with iPhone controlled smart locks.
I mean, that's the biggest pain of the whole industry.
That's what Noke does. They are a first mover. It's a $4 billion opportunity. And as I tell the story, as we're looking for pipe investors, which we've closed, you're getting a free option on Noke because we valued the company based on 2021 earnings, and there's no earnings from Noke in it. And I have transformed 4 industries with wireless connectivity in my career. If you're interested, I can talk about that, but I know I could help. And Clearlake said, holy mackerel, Roger's done this, put it together with Noke. So you say, what am I going to do after we buy the business? I am going to help drive the heck out of this Noke business, turn it into a recurring revenue business, and take this, I'll call it sleepy industrial company, and spice it up with a huge amount of technology. And by the way, they've already installed about 50,000 smart locks. One of the major operators, who I can't name, has already agreed to standardize on it. This is not just a dream. It's a real product. It's rolled out. It's off and running.
Is the Janus CEO the founding CEO, or is it an operating CEO? Is it?
No, the founding CEO is still on the board. He's a fellow named Dave Curtis.
Oh, that's great.
He started Janus as competitor many years ago. Then he started Janus. He is a gray beard, enormously well respected in the industry. He's a mentor to the current CEO, whose name is Ramey Jackson, who's been at the company for 20. The team is deep in the industry. They are self-storage geniuses, deep relationship with these customers, zero experience in terms of being public. And that's, hopefully I can help them there.
And so was that a hard part with Clearlake and Janus, or is that part of your, was that the hardest part of doing a merger?
No, this is a boastful statement, but what differentiated me from the other SPACs we were competing against for the deal is, by the way, Clearlake rolled over half their equity. So their upside comes heavily on the performance of the stock once we're public. Unlike trying to get the best deal from a SPAC, they were saying, who can I partner with to drive the heck out of the share price after we're public? So as you probably know, a lot of sponsors cash out an enormous amount of their equity. Clearlake is rolling more than half their equity, which, by the way, is a great story to the public market, in that the projections were showing the people that are responsible for delivering those projections, myself included, have a lot of skin in the game. So I was a big personal player in the pipe as well as being a sponsor.
So you've done the pipe already.
Oh yeah, with a done close.
And so total between the SPAC and the pipe, how much was in?
250 pipe, 350 SPAC.
And I mean, how exciting. I mean, this is the beautiful thing about what a SPAC is in a world that's so connected, and as there's just so many narratives to tell and so many things to get unlocked, no pun intended.
Yeah.
This is why I always hated indexing. I was like, you were teaching a generation of people not to ask questions and not, you know what I mean? Like not to do it.
I get it. Yeah.
And it was just so much a mantra. Oh, don't worry, you're going to retire at age 65. Here's the math. It's very dangerous 10 years, I felt. And can't blame Janus or BlackRock, not Janus, can't blame Vanguard and BlackRock for loving.
Well, there is a fund called Janus also, which is
right.
highly
back in the 2000s. So you see, but you can't blame Vanguard and BlackRock. The narrative was very good. The new narrative needs to be there's alpha if you can, like you did, you knew the private equity people, you knew the good private equity people, you knew the levers that you could pull to help a company run a public company. You knew how to look at inside the company and figure out there's some technology there that could be spun in a different narrative. So it's, there's a lot of opportunity out there. I think that's what's happening in the market right now. Now you're seeing pockets of silliness, whether it's GameStop or because no one knows. It's kind of like fake news has hit the stock market. It's like, I've been told these stories by the media and by the management and by BlackRock. But wait a minute, let me dig in and see if there's some alpha, there's some opportunity out there. So it's fun we need people like you doing this. It can't just all be Chamath and Russ and myself and young people doing
stuff. Well, I think there's room for there's room for a lot of people. The particular segment I'm at is, and I'm not the only operator today. I may be one of the few industrial operators, but there are other successful consumer product CEOs or tech CEOs that are now running a SPAC, and they have a similar view in their vertical market that I do. And then you have Chamath and Chinchu and that bring, if you could write a big pipe check and you bring a lot of your own capital to the table, it's an enormous amount of credibility. There's no doubt about it.
Yeah.
By the way, I have to admit this, if I was competing on a deal where I didn't have my operating advantage against a Chamath, I wouldn't bother.
Yeah, you can't win. You can't win.
I'm not going to win, right? So
no, because he can help around customer acquisition, recruiting. He has a bullhorn of which to say, come work for our company, come help me find new customers.
Yeah.
You said it yourself, you're not on social media, so all you can do is pick up the phone and call your network, and that takes more time. That's exactly. Time is money. So wow, I learned a lot. Obviously I'd love to talk more quickly about the company. So what's the market cap of the company today?
I'm sorry?
What's the market cap of the merged company today?
So the enterprise value was $2.2 billion.
Got it.
The equity value is about 1.6.
And what is
our stock today is trading about $13 a share. So the good news is, anything above 10, we're unlikely to have redemptions. The market has kind of said, we like it. We think almost all our shares have rotated from the short-term hedge fund guys. Fidelity led the round. I can say that publicly. Baron Capital, we can say that publicly. My board, and if you know Corsair is kind of a well-known long-only player. They filed the 13G. They own 10% of it. So we have, I think, successfully rotated our stock, which is a big trick for SPACs, out of the hedge fund types into the players we can count on to own our stock over multiple years.
Yeah. And so that's a process too, because you got to go back and away on a road show.
Well, Zoom makes that easy. I can't complain about that.
Isn't it amazing? Like for people that make fun of Zoom and go, oh, wait till the world opens up. I'm like,
We're
no,
not opening
guys,
up. I think the Wall Street community,
we'll never leave.
why would you? You could do one meeting after another
Yeah.
from the comfort of your own office. Why? And it lends itself. It's very transactional. It's very, you got an hour. You make your pitch, you take questions, and you go to the next. It's very well structured.
Oh
It's
my
not
God.
like a typical sales call.
If you had told me in February, and again, I own Zoom, and I can't understand valuations, but when I hear people say that as soon as the world opens up, Zoom, and maybe schools, of course, schools should go back to in student, and of course, people shouldn't work at home every day. But if there's one industry that needed this, it was financial. And the amount of time you schlepping at your age, not that you're old, schlepping to Toronto and Boston and New York to go shake hands, when they could have gone to LinkedIn, made a few phone calls, got you on Zoom, and you can go bing, bang, bing, bang, boom. As someone who's just been through a roadshow for our own S1, it's a miracle. It's actually a miracle.
Now, if I was making a sales call, to get back to the point, if I was trying to convince a family business to sell to me, that's not going to happen over Zoom. That is a
happen partially. Some of it can happen. It depends on the salesman. I think there'll be a new form of salesman. I know you may not want it for your company.
It could be, but there is something, and maybe I'm old school. There is something about going out to dinner with the person, meeting their family. I mean, in terms of relationship building.
No, and in the finance world, where money is now a commodity and basically water, you can get away with it. But you're right. In a business where you're going to have competitors and you have to handshake, it's different. So that world will come back.
I agree. Yeah.
That world will come back. Well, this is really exciting. I'll put it up on into the community. Do you have an idea what the ticker, or the ticker's already been changed?
Well, its ticker today is JIH,
JIH.
and there'll be a new public company ticker. I just don't remember what it is, Howard, but that'll be in the April timeframe.
Yeah, but it's a really successful de-SPAC so far. When do they vote, or is it all done?
Well, I'd be shocked. I hope the vote is just pro forma.
Yes.
I mean, there's.
And what, going through the process of SPAC, what is something that you think will get refined over time, or do you think it's pretty much there as a product or a feature?
Now, that is a really good question. And I've been trying to do a lot of thinking about it as I kind of prepare to do a next SPAC in terms of what I've learned and what I'd like to do better. So as a side note, one of the things that worked out really well for us, we had a fabulous partnership with what I think is the best industrial franchise investment bank. There's a fellow named Eric Moskal. He's the industrial investment banker at UBS. He dedicated a team for us. So that worked really well. And so to the extent that somebody's thinking about a SPAC, to me, deal sourcing is priority number one, number two, number three, because without a good deal flow and good deals to choose from, like why bother?
Yeah.
And I want to step up that machine in a big way. I think the surprise learning for me when we got to the pipe side, thank goodness my board had the financial wherewithal to step up. But, we did have a lot of big players come into the pipe, but it works a hell of a lot better, a hell of a lot smoother, less nerve-wracking if you can draw on your own resources to be a big player in the pipe. It gives it much more credibility. And that was a differentiator. And I have to say, I didn't think about that when I started the SPAC. I underestimated its importance. But looking back on it, Howard, I want to make sure that I've got people that will respond when I dial for dollars on my next pipe to help get the deal closed and not be entirely dependent on true outside third-party capital.
I think
So
that's
that's something that I learned.
Luckily, I was told that before I even started. So the
Yeah.
pipe I was aware of this in my own roadshow to make sure. Who cares what you can do for me today? Where are you going to be with the pipe?
There is no deal. If you don't get the pipe done, you don't have a deal.
Yeah, fascinating.
And
But
that
the
was just not
exciting thing is, and this is why I think SPACs are here to stay this time, is the education. This generation is just like, okay, fool me 10 times, whatever, but this is the way this stuff works. And we've already seen it go to zero warrants. We're saying like, hey, it's going to be competitive. We're going to Schwab Vanguard numbers right away. There's going to be a Schwab of SPACs, right? Of syndicates, right? Like this isn't, you're not going to get 30%. Okay.
Well, there already is today. I mean, there already
Altimeter
exists.
did zero warrants. So they're already happening. And the pipe will become even more important as you be able to control, because the founders are going to want to keep more of their equity. So the pipe becomes a more important part than the actual SPAC.
Sure. And that I just did not appreciate it, and now I do. So I'm going to shore up my resources there before I get deep into the next adventure.
Yeah, I mean, learn by doing. So and so it's in the family now. If the SPAC is attacked, the whole Fradin family.
I don't know whether I'm the only one, Howard, but my older son, as you know, is well on his way to launching a SPAC, and my younger son actually either has been involved in or closed, believe it or not, you know, Billy, 12 SPACs.
Yeah, no, the SPAC family. So it's just amazing how small.
We didn't start out that way.
Amazing how small the world is, you know, because I knew Russ, and then I met Betsy Cohen, and Betsy's, you know, the son. Your son worked for their son, and I'm like, what? How is this
unbelievable? I mean, that family, if you know that story. My goodness, I mean, what an incredible story of you talk about the American dream, and they lived it.
Because I know Russ, I haven't met your daughter, and I know Bill. What's and you were an executive, so on. So what is the trick to have your kids like you? And just give me make something, because they do like you.
To round it out, now I'm bragging, my daughter runs a big chunk of the artificial intelligence business for Google.
Correct.
So you talk about a cool job. It's one of the coolest jobs on the planet. How did I end up with 3 kids like that? I got the greatest wife in the world. She just, you know, she gets all. I may have done the business stuff. She nurtured and developed.
She successfully de-SPAC'd the family.
Exactly. She's
like a perfect de-SPAC. Your wife is like she's like an investment banker.
Exactly right.
All right. Well, this was a pleasure.
Howard, I really appreciate the time. Thank you for giving the opportunity to share my story. I really appreciate it.
Okay. Talk to you soon.
Thank you, Howard. Bye.